It's a new month, which means new data. The economy is showing signs of strain, but we'll get a clearer picture when the August jobs report drops here in just about an hour or so. The Bureau of Labor Statistics is facing a shakeup, and fresh data suggests that the job market is losing steam, both raising concerns that the trend is going to continue. NewsNation's Alicia Nieves is on Wall Street tracking it all for us. Alicia, are we expecting more evidence that job growth is slowing?
Yeah, good morning, Markie. I mean, today's report really is going to be one of the last pieces of the puzzle for the Fed to kind of make that rate cut decision in, 11 days from now. As you pointed out, we've already seen a labor market that's slowing down since that last jobs report. And even this week, some additional data that's come in for the labor market from JOLTS and jobless claims has showed there are fewer vacancies for jobs. There has been an uptick in layoffs and more people filing for unemployment. So to answer your question, we are expecting to see that in this report as well. In fact, economists polled by Dow Jones forecasting just 75,000 jobs added for last month. That'll be slightly up from 73,000 in July, but that's almost half the jobs we saw this time last year. The unemployment rate, that is also expected to tick up to about 4.3% from 4.2%. And I want to point out that many are also going to be watching to see if there's any major revisions in this report like we saw in the last report. Of course, a slowing labor market and those major revisions is part of the reason why President Trump fired the Bureau of Labor Statistics Commissioner, Erica McIntyre, first. So this report going to be the first one since that firing, without her being at the BLS. So we'll see if it's interpreted as being, more reliable. Now, in terms of what this report will mean for all of us, if it turns out to be a weaker print or a weak print that's being expected by economists here, there is almost a certainty right now. You can look at the probability there, 99.4% according to the CME FedWatch tool, which is kind of the gold standard for the probability of a rate cut, that we get at least a 0.25% rate cut. But if this report is actually even weaker than initially expected or than expected right now, I wouldn't be surprised if we start to see a 0.5% rate cut being priced in, and market's going to react most likely positively towards that, because even with this probability elevating to 99%, just yesterday we saw the markets rally on the idea that we could get a rate cut amid this weaker market. Ahead of the open, looks like markets are still mostly looking to open up higher, with the expectation again that we probably get a weaker jobs report, but that it pivots if we get a rate cut, and that'll help stimulate the job market, also help a lot of companies kind of reinvest with lower interest rates. So, Markie, you know the drill here, 8:30 a.m. We'll kind of go through those numbers live and really break down what they mean when they actually come out for you, me, companies, Wall Street, and beyond.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.